Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. Last 2-3 videos I have uploaded on the subject accounting standards. I have explained you the meaning, objectives, advantages, limitations and the list of accounting standards issued by ASB. So in this video I am going to explain you about the need for convergence and the next topic, IFRS as the global standard. And lastly, what are the benefits from convergence with the IFRS? These three topics I'm going to explain you in detail in this video, so watch the video till the end. Very frequently in examination, a question may be asked, explain the need for convergence of Indian accounting standards with the global standards. So what is the need? What are the benefits? That's the topic of today's video. So watch the video till the end. Before starting the video, take the screenshot of the points which I have written on the board. Then I'll explain all the points in detail. Come on, first of all, I'm going to discuss you about the need for convergence. Why there is a need for convergence of Indian accounting standard with international standards. First of all, on account of globalization, the world economies are integrated. There is no independent country in the world today. Every country depends on one another regarding the markets, regarding the cash, regarding the technology, regarding the human labor. For everything, one country is dependent on another country. There is free flow of capital from one country to another country. So investor, before making the investment in any company outside their own country, the investor wants to be sure about the financial health of the company in which he is intending to invest. So there is a need that the investor must have the knowledge, must have the understanding about the performance of the company in which he is going to invest it. So there is a need of convergence because of globalization. Now convergence with the global standard means having a single set of standards that are adopted by organizations all over the world. So a single set of standards are required which should be applied throughout the world in making the financial statements. Because nowadays the people from different countries are investing in different other countries. So there it needs one single set of standards which are applicable in all the organizations throughout the world. Now given the accounting standards drive the financial reporting. That means the financial reporting depends on the accounting standards. If there are accounting standards are regulated good, then definitely reporting will be very much effective. Global convergence of accounting standard is mainly from the perspective of investors looking to invest in organizations outside their own country. The importance of convergence of this accounting standard will be more on account of investors. The investors wants to invest not only in their own country, but also the investors wants to invest in other countries. So this global accounting standards will be helpful in presenting, in making the financial statements. For example, here, why this convergence is required, two examples are given so that you can be able to understand. For example, if Infosys plans to raise money in the USA, Infosys is an Indian company. This company wants to raise the money from USA. It will have to convince USA based investors about its financial performance. So without explaining about the company, without explaining the performance of the company, we cannot be able to convince the investors in USA. So there is a need. How this Infosys company will convince the investors in USA to come and invest the money in our company. So it needs to talk in the language they understand. First thing is, we have to speak in such a way that the American US investors can be able to understand. So if we have prepared the accounts, financial statements according to Indian accounting standards, that may not be understandable to US investors. So, thus if financial statements presented by Infosys are as per Indian accounting standard and such standards are different from what the US investors is used to, then there will be a communication gap. Because our accounting standards are different from the accounting standards in US. So if we present the information according to Indian accounting standard, he may not be able to understand. The US investor cannot be able to understand. So there should be a common standard which should be understandable to Indian conditions as well as abroad. So here, to remove this communication gap, we need some convergence of Indian accounting standard with international or global standard. Second, one more example. Similarly, if Standard Chartered Bank wants to raise money in Indian capital market, Standard Chartered Bank is a foreign bank. This foreign bank wants to invest, wants to raise the money from Indian capital market. But presents its financial performance that is not compliant with Indian accounting standard, it will fail to connect with Indian investors. Before making investment, the Indian investors wants to understand the performance of Standard Chartered Bank. Suppose if the Standard Chartered Bank has made the financial statements according to their own country, then Indian investors cannot be able to understand. They will not come and invest. So ultimately, the need of the R is a single set of standards are required which should be understandable globally, everywhere. That is the need for convergence of Indian accounting standard with international. Now, convergence will facilitate comparison, analysis, etc. of financial statements of different organizations across the world. So this convergence will help in making the comparison, in making analysis of financial statements of different organizations throughout the world. We can be able to compare. For example, our Indian company is making the financial statements according to convergence of Indian accounting standard and IFRS. Then what will happen? Throughout the world, other organizations that we can be able to compare. We have to compare the Indian company's performance with foreign company performance, because both are following the same set of accounting standards. The international community will be able to prepare and understand the accounts in various organizations in the same way. So international community can be able to understand. The next one, convergence reduces the possibility of organizations presenting false set of accounts, because the company's performance is reflected from accounts. If you want to know the complete, correct, true and fair view of the business, then financial statements should follow the accounting standards. Last one, convergence ensures. By convergence of Indian accounting standard with IFRS, then what will happen? The accounts will be more transparent. Transparency will be there. Consistency will be there. Then next one, comparability, adequacy and reliability of financial reporting across the globe. Throughout the world, we can be able to make transparent accounts, consistency in accounting, comparability, reliability, all these things, adequacy, all these things we can have if we follow a single set of accounting standards. So this shows the need for convergence of Indian accounting standard with global standards. Now IFRS as global standard. Now the question is, what is this global standard? The global standard is International Financial Reporting Standard, IFRS. This is called the global standard. Global convergence of accounting standard is an attempt to establish a single set of high quality accounting standard that can be used internationally. So convergence of Indian accounting standard with global IFRS will improve the quality of financial statements. Then a single set of high quality accounting standard which are acceptable throughout the world. And secondly, IFRS are a set of AS. IFRS stands for International Financial Reporting Standard. And this was a set of accounting standard developed by IASB, International Accounting Standards Board. So IASB will make this IFRS. These are becoming the global standard for the preparation of public company financial statements. So these IFRS are being used as a single set of accounting standards which are used by all the organizations throughout the world. Mostly public companies will follow. IASB follows a thorough and transparent process in developing IFRS as high quality, globally accepted accounting standard. So strict rules are applied in making this IFRS. So IASB follows a thorough and strict rules, transparent process in developing IFRS. These standards are robust, wholesome. That means they can adapt in any conditions. These standards are robust, promote transparency, and are gaining acceptance among the users of financial statements. Throughout the world, all the investors, all the companies are accepting this IFRS as the global standard. Now, financial statements prepared based on IFRS help the companies to tap the global financial markets. So, if any financial statements are prepared according to IFRS, then what will happen? It will be globally accepted by all the financial markets. And with the greater ease, since the borrowers and lenders can make well-informed estimates. There are two types of persons in the financial market, borrowers and lenders. Both are completely, fully acquainted with the performance of companies. They can make prudent judgments, the borrowers as well as lenders, both. So about the financial health of the companies. These borrowers and lenders can easily, judge the financial health of the companies. This is the IFRS as the global standard. The last topic in this video is benefits of conversion with IFRS. What are the benefits Indian companies are getting by converging the accounting standards with the IFRS? What are the benefits? So here 5 benefits I have chosen. The first benefit is better comparability. Nowadays there is a global market. The lending, borrowing will be taken place throughout the world. The world is treated as a single market. In such a situation, an investor wants to compare the performance of one company in one country with another company in another country. Two companies are there, an Indian company and a Japanese company. An investor, US investor, wants to compare the performance of Indian company with Japanese company. The performance can be compared if both the companies are following the same standard. So the companies has to prepare the financial statements following a single set of standard. Then easily we can be able to compare. The comparison will become easier if we follow a single set. That means a convergence of Indian accounting standard with IFRS. That's the first advantage. So Indian businesses become more global in terms of their operations and investor base. IFRS would enable a comparison of Indian companies with global peers. So any investor can be able to compare the performance of Indian companies with global peers in order to take the decision where to invest. That is the first benefit. Second benefit is transparency, clearness. Convergence with IFRS will also result in greater transparency about the company's activities to outsiders. Once IFRS is followed, then all the financial statements will be completely transparent. Nothing is fraudulent, nothing is misleading. Complete, it will be transparent. The transparency will be more if we follow IFRS. Then significant cost saving to global players. This convergence with IFRS will give the benefit of cost savings to global players. How the cost savings? If there is no convergence, companies that operate in different geographies have to prepare a dual set of financial statements for external. See, when there is no convergence, then any company which is operating internationally has to prepare a dual set of financial statement. One set for the home country and another set of financial statements for host country, foreign country. two sets. So in other words, one set is required for home country and the other set for the host country. This will not only increases the efforts of finance function but also introduce complexity in financial reporting. If two sets of financial statements are prepared, first of all, it will be costly. The cost effectiveness will not be there. Secondly, it will increase more complexity in understanding the financial statements since we have two sets of financial statements. But when we converge the financial accounting standards with IFRS, then what will happen? A single set. Only one set of financial statements will be complete, no complexity. This is the third advantage. Now, fourth advantage is facilitates funding from international capital market. Funding from international capital market. Just now I told you the world has become a single market. Any company, any organization can tap the money from any corner of the world. There is free flow of capital from one country to another country. So this global and raising of funds is possible only when there is a convergence of Indian accounting standard with IFRS. Now, IFRS makes financial statements more transparent from the point of view of international investors. Thus, the adoption of global standards reduces the risk premium and consequently the cost of capital for Indian companies looking to raise capital in international market. Before raising the funds, a company will find out what is the cost of capital for the new funds raised. Now a company has two options. The company can raise the money internally in the domestic country, or the company can raise the money internationally. Now the company will compare what is the cost of capital if we raise the money internally and what is the cost of capital if we raise the money externally from international. So normally what will happen when there is transparency, there is more competition among the lenders. Among the lenders also. Lenders wants to see where they can be able to get the higher return on their investment. So the company's cost of capital will become lower. That is the advantage to companies. At lower cost of capital, a company can be able to procure the funds internationally. Next, last benefit from this convergence is listing on international stock exchanges. So international stock exchanges. Now an investor can take part in stock exchanges globally. It is not necessary that a person has to participate only in the home country stock exchange. A person can enter and communicate in the international stock exchanges also, other countries' stock exchanges also. But stock exchanges will put the rule that any company which want to list in a particular stock exchange, the company should follow the international accounting standards. That means there should be convergence of IFRS. Then only they are allowed to participate in the stock exchange. So normally any company who wants to play a part in international market, they have to follow the IFRS. IFRS are accepted as a financial reporting framework for companies seeking admission to almost all the world's stock exchanges. Many exchanges insist on the reporting as per IFRS. So many stock exchanges, reputed stock exchanges, they are insisting on the companies to follow the IFRS. Then only they are allowed to participate, to list in the stock exchange. So thus organizations seeking to get listed in such a stock exchange may be required to convert their financial statement to IFRS to meet the regulatory or market requirements. So every stock exchange are insisting on the companies to prepare the financial statements according to IFRS, then only they are allowed to participate. That's all. So in this video I have explained you about the need for convergence, then IFRS as the global standard, and lastly what are the benefits from convergence of Indian accounting standard with the IFRS. So inshallah we'll continue the next topic in the next video.